Here's Alibaba's annual report for fiscal 2021. Note that their fiscal year ends on March 31st, so 2022 numbers are not included. And for that, we have to look at their interim report or other earnings calls. So, the Alibaba ecosystem GMV has grown to over $1.2 trillion, which is amazing. The China retail marketplace's GMV has grown to over $1.1 trillion. And globally, they have over 1 billion annual active customers. China is still their main market, with 891 million AACs. The international market for them is growing as well. 240 million is no small number. And I'd like to see more progress in their international expansion through platforms such as Lazada and AliExpress. Next, let's take a look at their cash flow statement. So the annual report has many other statements, but I believe this is the most important. In 2021, they made $26.3 billion. And let's compare this in US dollars with their 2022 numbers. So in 2022, they made $18.4 billion. So the increase is astounding, although I would say that investors should not expect this kind of growth every single year, since for between March 2020 and March 2021, a lot of the increased spending we explained through COVID, where more people were working from home and buying more things online. So if we were to look at the free cash flow trend for the past 5 years, you can see that it's been growing steadily. And putting this into a CAGR calculator, we can see that the past 5 years growth for their free cash flow has been 27.48%, which is very high for a company of their size. Next, I want to take a look at their profit margins. In 2021, their operating margin was around 11%. However, this is a kind of an all-time low for them. You can see it's been decreasing from almost 30% 5 years ago. So whether this would stabilize or not would affect our decisions on the potential of Alibaba Group. Comparing this with a peer like Amazon, which has around 5% operating margin, I would think that the trend would continue and they would decline to closer to that number. The notable exception to this would depend on their cloud business, because cloud computing has much higher margins than other business segments, or at least has the potential to have higher margins. So one thing that was curious was that their net margin has been consistently higher than their operating margin. And at first I was quite puzzled by this, but I found a good answer online on why this could be. So it is possible for a company to have net margin higher than operating margin in cases where their non-operating revenues are more than the sum of interest and tax. So what this means is that Alibaba doesn't have to pay a lot of tax or interest on their loans. This can happen when they are in an industry that the government actually supports. Next, let's take a look at their annual active customers. Since 2019, they had 674 million annual active customers, and it has grown to 811. And this is amazing because it shows that while they are already very dominant in China, they continue to penetrate the market. However, there is one thing of concern for me. Depending on the numbers you believe, China's population is shrinking at various rates. So it's possible that China's population is actually closer to 1.28 billion rather than the 1.41 billion census. So if it is true that they are over-reporting their population, so it means that Alibaba would have a smaller total addressable market than you might think. So right now they are at 811 million annual active customers, and based on their historical growth rate, which was around 11%, we compound this over 3 years, and you can see that it's already very close to the entire population of China, which means their global expansion is super important. Next, let's take a look at their international commerce. So their international commerce retail has grown from 24 billion renminbi to 34 billion. And the international commerce wholesale has grown as well, from 9 billion plus to 14 billion plus. This shows really strong numbers. In fact, most if not all of their BUs are doing well, like core commerce, cloud computing, digital media and entertainment, and even other bets.